Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the dump that we've been seeing on the charts. Of course, if you've been watching Alpha Commission, you were probably prepared for this. I've spent months going over the possible bearish scenarios as we start to get very choppy and to the right here. We're more likely to get rejections than we are to get wins. Of course, I was warning everyone to get out of the market up here at 59,000. And then I was warning everybody about the possibility of a market collapse back in December. And I was also warning people to get out of the market here at 47,000 bucks approximately there. So overall, I've been having a very good track record of the major recommendations, the most important recommendations that could save your money. That's not to say that I've been right about every pump or anything like that. Of course, I've made a ton of mistakes personally in trades, but that's how trading goes, right? You should just be better than 60%, and nobody can be 100% correct. Of course, there's going to be losses and there's going to be just confusions because not everything's crystal clear about what's going to happen. But what is crystal clear right now is that Bitcoin is basically just a meme tech stock that's trading with the stock market. And here I can show you that I've superimposed the stock market over the Bitcoin chart. So this is the stock market. Let's go ahead and change that color to, let's say, yellow. And then I'll go ahead and put the price action of Bitcoin back on. And you can just see what's been going on here, right? What's been going on. Sometimes Bitcoin has been, a little bit off, but in general, you can see that Bitcoin has been trading with the top tech stocks. Okay, here it front run it, here it had a delayed reaction. Here stocks were a little bit delayed, but here stocks were a little bit advanced. Here stocks dipped a little bit more extreme than Bitcoin, but they both came up to similar levels. And then, of course, as stocks are dumping, so too is Bitcoin dumping. And, they have different prices, so you have to manipulate the chart just to kind of line it up. But when you get one section, lined up pretty good, you can see how the price action is really just, an exaggeration of each other. And so this stock price action perfectly matches our current price action. You go back here, and then you kind of just contract things a bit, and you see, yeah, you know, the stocks were a little bit more bullish, but overall we got to these same levels, and the rest of it just pretty much tracked each other. You move this over here, and look, this bump right here, and this descent, and even this peak, right? Like it pretty much just tracked each other. And it seems to be in the beginning moves is where these two assets don't, two asset classes don't want to jive together perfectly well. But you can always just kind of move the chart a bit and kind of stretch it out. And you can see that the algorithms, the bots, right, the professional traders who have the same psychology as each other because they're trading both of these assets, right? Like it does align very, very closely, right? Very closely. And they get out of sync here and there. But again, if you just rescale and just understand that, sometimes it's ahead, sometimes it's behind. But in general, the price action is very similar. Then you can see Bitcoin is basically just a stock. Just a stock. And this really took foot, you know, this took a hold in this area over here in 2021, at the end of summer 2021. And prior to that, there was a little bit less. There was a little bit less of a tight association there. You can kind of see it in these run-ups. You can kind of see it in this like fall down here. You see this correction that the market had? It lines up almost perfectly with the correction that Bitcoin had. It's just that Bitcoin has like crazy exaggerations. Has crazy exaggerations. And even during the summer, you can see this big dip here. That perfectly corresponded with the dip right here. So although this is a distortion of each other, like these are distortions, okay? The price action is very similar. It's just for whatever reason, like they get off track. And I think it's just because of how much money is involved, and also that there are different market makers because of the different exchanges. So many of the market makers are just specific to crypto versus stock market makers. And so this can cause huge deviations in terms of the exaggeration on the chart. But whenever you zoom in, you do find it tracks almost identically. They don't make it that obvious, but when you zoom in, yeah, you can see it. And the thing is, at our current price action, it's pretty clear. Like we're just following stocks right now. So what does that mean? Be aware of what's going on in the economy because crypto is going to just be following the stock market. And there's nothing that we can do about it. Okay? It doesn't matter how much you believe in crypto right now. It doesn't matter if you think that Bitcoin was designed to save us from the regular economy. It literally is just tracking the stock market, okay? So, Bitcoin is a tech meme stock. There's nothing particularly special about it, right? You see anything special here? I don't see anything special here. It's not doing its own thing. It's doing something else. And what does that mean? It can also have an exaggeration if it crashes. While the stock market maybe crashes 10, 20%, right? Bitcoin can crash like 50%. Bitcoin can crash 85%. Whereas stocks have this kind of 10 to 20% crash. And then maybe they could get up to like 50% crash. Just Bitcoin has so many exaggerations on its chart. And even if we just line up the current price action, just gonna make it pretty similar, right? Pretty similar. You can see that we've pretty much tracked the stock market. It's hard to deny. It's hard to deny that we've pretty much just been trading as a tech meme stock. And probably Bitcoin has been something more like this. Like probably Bitcoin was, on the bullish side. And every once in a while, the market makers kind of suppressed the price so that they could buy in, like in the last, like in the last minute, they could buy in at whatever good prices that they wanted. And then they pumped it up like crazy and then dumped it. And then it went back to this kind of stock trend line. What would that suggest? Like if you're just a reasonable person, what would that suggest? Well, if this is our baseline and we went like this, how do we get back to our baseline? Like this, right? Here, we're just tracking normally, no issues. But here, this is our baseline because the stocks seem to be ruling. And if crypto went like this, how does it correct? Like this, right? And same thing works on the downside. If this was the baseline for stocks and crypto went like this, then that's how it corrects. If it went like this, then how does it get back to the baseline of stocks? Like this. What happened? Crypto went like this. This was our stocks baseline. What happened with crypto? It came down here like that. So even if you think Like, nah, crypto doesn't track stocks perfectly. Well, it's just that it has like hysterical fits up and down. And that can explain why Bitcoin during the summer had this like curve down while the stocks were curving up. Because what was it? What was going on, guys? There was a baseline, price went like this, and to get back to stocks, it came down. That's why we saw that curve down. That's how simple it is. Where's our baseline? Here, from December, right? From summer to January. We went like this. We didn't fully correct, so we went back up, but eventually we had to correct back down. And guess what? Here's the problem. Here's the problem that's developing on these charts. Stocks has this baseline, and crypto is doing this. What do you think is going to happen? And then what happens if stocks go even lower in their correction? Then maybe we can see this $20,000 area. Guys, I'm probably the only one who is showing you this concept. I don't think there's been anyone who has shown you this concept visually before. We've heard people say like, you know, Bitcoin is becoming more and more, coordinated with the market. But I don't think anyone has pointed out to you how the stock market creates a baseline and how crypto is trading off of it. Exuberance, destruction, destruction, repair, destruction, repair, exuberance, destruction, exuberance, destruction. This is technically exuberance that we're in right now in crypto because the stock market baseline is down. And it doesn't matter if you draw it from here to here. It doesn't matter if you draw it from here to here. The fact is, this is where we're at. And what does that suggest for crypto? I'm repeating these things only because I want to drive it home. Nobody has shown you this before. I guarantee no one has shown you this before. I'm the only one who has shown you like the truth of what to expect with this and how Bitcoin behaves always as a tech meme stock. Right now we have a big deviation. Right now we have the potential for more correction in the market, the stock market. The yellow one is the stock market. The stock market can continue to come down. But even if it doesn't come down more, even if the stock market doesn't come down more, even if the stock market starts to try to repair, crypto still hasn't done a repair yet. Crypto hasn't come back down to the baseline. And if the baseline gets lower, it's going to get very scary for crypto. And if the stock market can repair a little bit, it's still going to be kind of scary. Kind of scary. Does this make sense to you guys? Do you understand what I'm pointing out here and why it's extremely important? Do you understand why I say don't be a moon boy? Do you understand why I'm saying like your harmonics and your patterns from old stock markets and all of this stuff, it's just BS, okay? Like you can trade on that stuff in an up market because those patterns they get developed in an up market, right? So whenever you have an upwards market, like this kind of period of like clean up, right? Or this period of like clean up, and overall the market goes up, right? So on average, those patterns work out very well. But if you're finding that your harmonics and that your patterns aren't working out, it's because we're in those rare times when we have down markets. We're in those rare times when we have down markets. And when you have down markets, big that big influence of the up market is taken away. The context of those patterns is taken away. You're robbed. You're robbed of the context under which most of those harmonics and those patterns have been developed. Because on average, the market goes up. So in order for those patterns that you're using to be valid and to be consistent and to have predictable outcomes, you have to use them in an upward market. And if you're in one of these patterns where we're in a down market, which we are right now, make no mistake about it, we are correcting right now, right? We corrected here, and we have another correction that we're in. Your patterns aren't going to work for you. Those patterns were developed to accommodate an upward market. They work lovely during bull runs, beautifully during bull runs. You can exceed their expectations during bull runs, but they suck during downturns. You know why? The guys who made those harmonics and they made those patterns, they developed them during a general uptrend. They did hundreds and hundreds of backtesting, which on average each existed in an uptrend. And while this or that pattern, may have been measured in a downtrend, on average, they were during an uptrend. So I'm just telling you guys, don't be too fixed to certain ideas. Even professional traders who've been trading for decades are going to be missing the point that I'm showing you right here and that nobody else is talking about with you. Which is that right, this was a correction to the baseline. 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 Here's the baseline. Correction. Baseline. Correction. Baseline. Hopefully we come back up because otherwise this is going to be a really nasty one. Correction. Right? Stocks had better pump really soon. Stocks would have to correct all the way up to here. Stocks would have to go up to here for this trend to be here and for crypto to pump up to here. You see? You see how that's not going to happen? I'm not being a doom boy, okay? I'm just saying stop being moon boys. Look at what I'm showing you. Listen, I know I'm not the most experienced trader. I know I'm not an expert. I know I'm just a continuous learner. I'm not, I can't be everything. But what I can present are these concepts that nobody else has showed you. What I can do is show you what's happening, on the 3-day with our EMAs, right? Where we're getting squeezed by the 50 and by the 200. and that results in a pop down. Let's see here. Let's go to this chart. 50, 200. Right? This is our crossover here. This is the danger point. Same as what happened in 2018. 50, 200. Not trying to be a doom boy. I'm just pointing out the truth of it. When these things got together, you had a cross to the downside. As these EMAs approach each other, right? I can turn off the EMAs because I drew it as blue and orange, right? This purple and the blue one, the 89 and the 50, suppressing our price action. And then the 200 EMA and the 200 MA coming up and uplifting us. And where they squeeze together, you pop down. Where they squeeze together, you pop down. So you can see that point. And the 5-day Gaussian channel stuck under the middle, drowning in this tar pit, getting squeezed down. Here we didn't touch the bottom. We didn't get stuck on that bottom. We were able to recapture the middle and bounce out of there. Here we got stuck on the bottom. We kept getting stuck, kept getting stuck, kept getting stuck. If you don't ever firmly plant on the bottom, you can swim back out. Your head's still above the water, right? But if you drown and then you get stuck on the bottom, both feet stuck on the bottom, and you can't even break through the middle, you're going to drown. You get stuck in this tar pit and die. And then the best buying opportunity of your life is going to be at the bottom of it. Really, the best buying opportunity of your life is going to be at the bottom of it, wherever it goes to. And what am I showing you with stocks? With stocks, I'm showing you that we could go to 20K. We could go to 20K. With Gaussian channels, look how much it fell. It would suggest like that 20K area. Go to the weekly, just use the EMAs, touching the 200s, touching the 200s. 200s are down here in the $20,000 area. Where does all this price action converge? May, June. Let's turn on the pattern. This is the pattern from 2018. This price action right here, that blue lines, that's this price action. Let's go ahead and go to a daily. This blue price action is what happened in 2018. It's almost identical to our current price action. Russian war, threat of nuclear war just suppressed us a bit right here. They didn't have that in 2018. They didn't have the threat of nuclear war in 2018, so we got a little suppression. Market corrected when they figured out that nukes weren't going to be flying. And then it's just been consistent with our current price action. And if we keep under this level, I'm telling you, like, this is where we're going to converge. And what happens? Boom. See that? Now this fractal is getting a little bit crazy. We can't predict all of this. We can just predict that there's going to be a breakdown. We can't predict exactly where it's going to go to just from a fractal of previous price action. We can't forecast based on that. Who knows? This could be a totally different, world situation. It could be lower. It could be as low as 14,000 or 10,000. Or it could be higher. It could be, 24,000, 25,000, 28,000. Maybe even this could be the bottom, like 33,000. And maybe we just get a double bottom and then we go on our way. But the key point here is that this price action converges to push us down using fractals, using Gaussian channels, using EMAs, right? Using stock market correction concepts, right? Sorry, I've adjusted the chart. So putting all these things together, we're risk on right now. We're very high risk, very high risk. Where do I start getting worried? Around the beginning of May. Where do I start seeing critical worry levels? Like mid-May. And at any time, something could just tip us over. How do we escape that? Get above 44,000. And then as quickly as possible, get over 48,000. Why 48,000? Because that's the midline of our Gaussian channel. If we can get above the midline of our Gaussian channel, the only way to escape that fate has been to get over the midline. And then you use it as support, you touch the surface, and hopefully you can get back above. So we literally have to pump to $48,000 if we want to have any chance at all. But it looks like we're just getting wedged down in the same way that we got wedged down in 2018. Now in 2018, we went to the top of the Gaussian channel, right? I mean, on the relative price action, we would have gone back to the top of the Gaussian channel. This is just relative price action. It's not exact price action. And many people were calling for Bitcoin to have a relief rally to $50,000. And I wasn't so sure. I wasn't sure that we were going to break down in any of these areas. And I wasn't sure that we were going to pump to 50,000 either. Just don't be a doom boy. Don't be a moon boy. But what I was pretty sure about was that we weren't going to break this area. And that was based upon fibs also, so add that to the list. So 5 or 6 confluences. And what else do we have? Well, we have the volatility. Maxed out volatility. All right. I mean, this is like a maximum low volatility, I should say, which means the market is easy to move. Right here, right here, right here, right here. Here's another one. And we have like volatility has just floored, right? Let's look at these zones. When volatility floored, look at this. We got a huge pump up. When volatility floored, we got a huge drop down. When volatility floored, we got a huge pump up. When volatility floored, we got a huge pump up. When volatility floored, we got a huge crash down. Volatility is flooring again. Something is going to happen. Something is going to happen. And it's going to be big. It's going to be either a move like this or a move like this. That's a 50% move. That was a 450% move. But let's take it from the top down, because let's say that we track down, right? Like 80%. And if this does continue down, then you might consider this top of it. So maybe it just actually began here. 80% could bring us down to 10,000 bucks. Basically retesting the breakout. Why would we retest the breakout? Because there's a lot of price action here. A lot of price action. A lot of trading in this area. A lot of orders. A lot of area of interest. It's never been retested. Did we get it right? It's never been retested. But what happens in stocks and on crypto? Retested. Test, retested, test, retest, test, retest, test, retest. Retest. Test, retest, test, retest, test, retest. Like every area where there's price action, right, gets kind of retested. Sometimes it's on a diagonal. Like this isn't a perfectly straight line, it's a diagonal. And so this too, this price action is kind of on a diagonal. What would that suggest? Let's just be generous, right? 14,000. What have I been saying, guys? 14,000 is possible. It is possible. Don't tell me it's not possible. It is possible. 10,000 is actually possible. I know people hate to hear that. 10,000 is possible. 14,000 is possible. And then also $25,000, $28,000 is possible, and even $33,000 could be possible. Maybe we just come down here and we just take off or go sideways forever, right? But you need to have these concepts ready in your mind because it's looking like the world is entering into an era when we could possibly be having these big kind of corrections on the stock market and in the economy. And whether or not Bitcoin is pumping a little bit in this area, look how teeny tiny that little baby pump is. That's nothing. Yet Bitcoin leads all of crypto. We're talking about moves like this, or like this, or like this, or like this, right? We're not talking about these little teeny tiny baby moves. Who cares about this? Like everything that people have been stressed about this week, or the last month, or the last 3 months is just nothing on the charts. It's literally nothing. Yet people have lost all of their money or made all of their money in that little area. People have made all of their money or lost all of their money in this little area. But you know what? There's a lot more price action that came here, and it hasn't been retested yet. So we'll see. It could be an anomaly. Maybe it doesn't get retested. Maybe we really do just go straight sideways, and then pump, right? Like maybe it was this and like, oh, we don't have to dip. We could just go straight sideways. Yeah, stocks always just go straight sideways and then they pump like crazy. No, no, they retest, right? And they don't always retest the bottom in the beginning, right? And they don't always max out. Sometimes they round, a rounded top, and then test a midline. And then maybe they have a bounce up and a bounce up and a bounce up and a bounce up. And then they come back and test the ultimate bottom. All right? These things happen. These things happen, and you should expect it. You should expect it to happen, and you should have the plans for it to happen. All right? I showed you this fractal a couple days ago. I showed you what can happen. I showed you how to use the Gaussian channel a few weeks ago to get the best trades of your life, to show you where these things break down. Right? I went over everything. And if you don't understand how to use these things, I taught you how to. Even my hero trader, Crypto Crown, like he was dismissing this idea. And so I went over it step by step so that people can understand how to use this tool properly, not just look at this red and green area. That's wrong. You have to understand the tools that you use. You can't just stereotype them. And here, January 20th, months ago, I warned you about this possible dip coming up. Look at this. Look at this. I warned you. I suggested that in this area, we could be seeing a dip just like this. Months ago, I warned that we are likely to have a dip coming up. And then I reposted it in March. I reposted it a month ago just to remind you. And I first talked about it here. You see this? December 28th. And I actually had more. I had more before that. December 28th. So from the top, when I was getting out of the market here at 59,000, just cashing out way before any of this happened. By this point, December 28th, by this point, I was warning, hey guys, there could be a huge crash coming up. And I pointed out this area, right? This area. And then I kept building on that theory for months. For months and months and months and months. I've been building on that theory to try to protect you guys. I've had arguments with moon boys who thought like we're just gonna go to the moon. Who said buy everything as everything was crashing, like buy it all because we're going to the moon. But I've been warning you since December 28th. I've been repeating it January 20th, repeating it on March, teaching you like more ways to think about it in April, and showing you what can happen if you ignore these warnings with a variety of methods, Gaussian channels, EMAs, volatility, right? Just the market trend itself, using stocks, using fractals. Like how many different ways have I shown this? And if people still choose to ignore it or make fun of me as a bear, it doesn't make sense. I was bullish here because we were pumping. And I told you sell there. I told you sell here, and I told you to sell here. I'm warning of a crash here. I also told you to buy on this confirmation. I told you to buy on this confirmation. I said buy here. I said buy here. I said sell here. I said sell here. Pretty good track record. Those are positive things that I said. Everything else I know was a theory. But the reason why I'm emphasizing these things is not to be like narcissistic or something like that. I don't care about that. It's just protect your capital, guys. If people are telling you to buy everything right now, just be very careful. Be very careful. I'm not going to say don't do it. It's up to you. But be very careful. Use a stop loss. Understand that until we get over 48,000, we're not bullish. And that this market has a huge deviation with the stock market right now that could cause it to come down even harder. Sorry. That we can test these levels of breakout that were never tested before. We don't have to, but we could. It's a possibility. It's not fate, it's a possibility. And I've been saying it for months, since December, January, March. Yeah, we can have bullish models, but sell every chance you get. We can have bullish models where maybe we do pump to heaven. Maybe we do get, oops, maybe we do get a third wave. How's that invalidated if we chop right here? If we keep chopping to the side and we don't get above that 48,000, then the bull run is invalidated. Okay, guys? Sorry to break the news. If we stay, I mean, we've already basically perfectly conformed to my fib wedge. Look at this. You guys know I drew this from back here. You guys know who watch my channel. You know, I have a last resort trend right here. Or if we break that, like, we're kind of screwed. Horizontal supports like this, like we're getting pretty close to like breaking down if we get any lower. And we have a death cross that we're trapped in. That's based upon EMAs. Right? These EMAs and these EMAs colliding with each other. Backed up by a Gaussian channel that's turned blood red and which were stuck on the bottom. And which in the past has resulted in this. Whose fractal would look like this. If it plays out to the same intensity. It doesn't have to. This could be exaggerated. But the squeeze is still real. It's still a very real possibility, unless we get over 48,000. Now, the Stokes suggest 46,000, but I just have too much confluence on this, so I'm going to stick with 48,000. Yeah, we don't enter a bullish control zone until 53,000. So, yeah. see the weekly, 38,000. Cross below 38,000 to cross down on the weekly. We could keep going sideways. We don't have to necessarily cross down. We could just meander a bit, right? Sometimes these lines just meander, or they dip around. Daily cross below 39,400. We're at 39,600. So yeah, we have a lot of risk here. We have a lot of risk here. There is the potential for a pump up. It could be possible that we flip this around. But we're running out of time to do it. We're running out of time. We're going to lose all of this potential bullish momentum that could have been built up here if we just meander to the right. We need to pump up. We need to break. Let's just go by what the Stokes says. We need to break at least 46,000, and then we definitely need to break 48,000 for my model. Stokes works pretty well. We're not close to that number yet. Stock's bleeding. I was warning about this yesterday, warning that we could see this kind of a Bart Simpson pattern. And it's why I didn't take the trade, right? Go watch the Credo video. I didn't take the trade, but I was really tempted to take this trade because it was very tempting. The market makers get you this way. They give you like a bullish area to want to buy into, right? They set it up so that you have this kind of like bullish pattern. And they make it look like it's going to break up. And that you've got kind of a cup and handle. But you know what? We didn't break the resistance. So why would I buy there? We would have to break resistance. And then we could talk about this target. Instead, we found out this was just a manipulation. This was a Bart. Institutional candle. Bart Simpson haircut means coming back down most of the time. Most of the time. We've got something bullish going on right here. This could pop up, do something interesting. Kind of like here, right? Let's pop up, maybe chop around. %3. I had a buy signal here, which would have given, a nice 30 to 40%. Had to be broken up. Returned all the way back down to it. If you bought right there, you'd still be in profit. And then there was a very weak buy signal here. But I told you on the last video I wasn't going to take that because it could have just been referring to this kind of like 4% pop here before rejection. We needed to break above resistance. My friend Crypto Reda always reminds me and the people of his group and AR Collective, mark out those resistances. And so thanks to my friend Retta, I had this resistance there, and we never broke out cleanly above it, and so I didn't take this trade. So I really appreciate, those things. It can sound like a basic thing, but when you're using like fibs and diagonals and volatility and trend and fractals and Gaussian channels and EMAs, you can get distracted and you can forget about some principles, certain basic principles. And sometimes you can just take a trade that you shouldn't have if you just followed your principles. And so it's good to have friends that remind you about stuff like that. And I was looking at this one. I said this was a perfect place to buy. This was a perfect place to buy. We were kind of watching this pump. I wasn't able to get that one. And then I had some buy boxes down here. And we tagged it perfectly. Coming back down to this one. Is this going to reset back to the trend? I don't know. Maybe it's just going to hold this support. But if Bitcoin breaks down, this one will probably break down too. What was that move? 30%. All right, guys. That's it for the market updates. I'm not really predicting anything, just to be very conservative. Move your stop losses up. Follow stocks. I showed you how Bitcoin is following stocks. Be very mindful that we're entering into a very dangerous period here, and that we're in the middle and even the bottom of this bottom zone. And that's a very dangerous place. When we were up here, I could have a little bit of hope. I could wait to see, we poked up above this resistance. I could wait to see if we could poke above this blue one, which is more important than this pink one. This pink one is stronger, but this blue one is way more important for us to get above. And then taking out this high is critical. So again, that $44,000 to $46,000 area, super important. And then really to be bullish, we have to take out 48,000. And then I'll believe that we're going up. But as long as we're under the midline of this bearish formation, this could be a disaster. So take care of yourself, Alpha Fam, okay? Take care of yourselves. That's your alpha for the day. Stay safe and happy trading.